Okay, once again, thank you for joining us today with this presentation. I am happy to be speaking to such a distinct audience today. We will be talking about some basic information about opening business in Turkey. For those who doesn't know me, my name is Ali Ceylan. I am a senior partner at Grata Istanbul office. About Grata, I'll just give a very quick information. Grata is a law firm with an age of over 30 years, with more than 250 professionals. And as you see, we have such a wide coverage of and the presence, and we have, these numbers will give you some ideas about Grata, I believe, and Grata is also very proud of being always on the ranking lists of some firms like Legal 500, Chambers and Partners, as you see. And we are a full service firm. We cover all areas of law, and so that helps us to meet the needs of clients in all matters. And we are active in all of these sectors, as you'll see. And we are happy to serve our clients once again in any matter. So I'll keep that short and start my presentation. I believe personally one of the reasons we are having this presentation today is the ongoing conflict between Russia and Ukraine. As you all know, Turkey kept a position different than most of the world. Turkey kept its position neutral and independent, and unlike the EU and the US, Turkey has no official sanctions implemented on Russia or Russian citizens. Military planes and vessels are a few exceptions to that, but other than that, Turkey legally and officially do not apply any sanctions on Russia. Of course, Turkey, in that respect, offers some opportunities for Russia. When I say Russia, please consider it like Russian citizens and Russian companies. Because Turkey is not subject to any sanctions like Russia is having now, EU and the US companies can enter into trade relations with Turkish companies. And because Turkey is a member of the EU Customs Union, so that's also a benefit for Russian companies. And of course, for the last few days, when we were working on our presentations, there were some developments, and you may have heard that some further pressure, I would say, from the EU and the US is on Turkey now. Lastly, the MIR system of Russia, the payment system, was being used in Turkey. So two banks had to suspend that application. So the pressure is increasing, but Turkey keeps its independent and neutral position. So after this short introduction, I will talk about some more specifics. So we start with company establishment. There are two types of companies that foreigners can set up in Turkey. One is joint stock company. We call it anonim şirket, AS in Turkish. This company, joint stock companies are set up, as you see on the screen, with minimum capital of 50,000. There can be one shareholder. That one shareholder can be a legal entity or a real person. It is managed by a board of directors. So if you set up a company, the board is the governing body of the joint stock company. Joint stock companies can have two types of shares, which is registered and bearer shares. And I will be talking about that in my next slides, but the joint stock company shares can be printed. So you can have physical shares. And if you have that, there are some tax advantages on having your shares printed. Okay, if you have printed shares and you keep that at least for 2 years, and when you sell your shares in the company, normally when you sell your shares with a profit, that profit is subject to tax. But if you have your shares printed and you keep it for 2 years, that tax is not paid. It's exempt from tax. For companies, 75% of the profit is exempt from tax. So it is very commonly used in Turkey to be able to benefit from such an advantage. Furthermore, unlike limited companies, share transfers of joint stock companies are not subject to any notarization or announcement or registration at the trade registry. There's one exemption to that, is if there's a single shareholder and that single shareholder is changed, then you need to register that at the trade registry. Still, you don't have any notarization or any bureaucratic process, but you have to register it at the trade registry. By the way, even though, let's say you change your one shareholder, but you didn't register it, it doesn't have any serious consequences or penalties. So I know, because of this heavy and strong sanctions, which is frankly unfair at some, at some point, we are having some questions from our clients that they don't want their names to be publicly seen. So joint stock company in that respect may be helpful. One of the important differences is shareholders are only liable for the capital commitment amount. So for whatever amount you set your company, capital you established your company, the only liability you have is to pay this amount into the company as your capital contribution. When it comes to board members, of course, they're liable for public debts because of their, running the company, managing the company. Board member is different. So one shareholder, so because the board members not necessarily needs to be the shareholder, a shareholder with a different board member will, for such a shareholder will only be a small liability, I would say, of payment to capital. The main governing body of a joint stock company is the General Assembly, the meeting. We call it General Assembly, which shareholders attend, and you can choose your board members, and you can decide on profit distribution, you review your financials, etc. That's done at the General Assembly meeting. Under Turkish perception, joint stock companies are considered like more corporate bodies. When it comes to limited LTD, the capital is only 10,000 TL. And by the way, I would like to mention that this capital amount in the joint stock companies, what you need to do is you need to deposit 1/4 of your capital, the committed capital, before the establishment, and the remaining 3/3 is to be paid within 2 years. Limited companies are managed by managers, run by managers. One manager is also possible. One shareholder is also possible. But there's one rule different than on joint stock company under limited companies is that at least one of the shareholders must be the manager. So if you have a sole shareholder limited company, that means you have to be also the manager. Limited companies doesn't have physical or printed shares, unlike joint stocks, and the share transfers are subject to notarization, and it should be registered at the trade registry and announced in the official trade gazette, so it's a public information. And unlike joint stock, limited companies do not have such tax exemptions that I talked about under the joint stock while I was talking about the joint stock companies. A major difference, I would say, is limited company shareholders are liable for public debts. So under the joint stock company shareholders, as I mentioned, only liable for paying the capital commitment, but limited companies shareholders are also liable from public debts. The major governing body is the shareholders meeting. It's like the General Assembly meeting of the joint stock companies. Again, limited companies are more preferred for family-owned companies, one single shareholder companies, mostly these kind of establishments choose to be limited. Briefly speaking about foreign company branches, the branch is exactly the same like a company in terms of taxation. It's managed by a branch manager appointed by the parent company. The parent company, the foreign company, should allocate certain amount of capital to be used for the branch operations. And under Turkish regulations, branches are considered not to have a separate legal personality from the parent company. So whatever branch does, any actions, any transactions, it is considered as if it is done by the parent company. So parent company is liable for all actions of the branch. That's the major difference, I would say, from a company, because if you set up a company as a shareholder, your liability is very limited. But if you open up a branch, your liability is like your company, as if it is present in Turkey. And the liquidation process is also just like a company. I included free zone companies in my presentation because this is one of the issues we are being asked by our clients, and we're being asked about that very frequently. As you see on the screen, there are quite some exemptions, but these exemptions are mostly for production companies, because I see some confusion in that respect because of the questions I am having from my clients. If you are a transit trader, you just buy and sell, you really do not need a company in free zone. If you're going to set up your own production facilities and you're going to be that company will be exporting, then free zone companies may be considered, because free zone companies are more expensive, the different establishment procedure, and very important, I believe, you can set up a Turkish company and have a branch of that Turkish company in the free zone. So, why I'm telling you this is when you start your you can enter into market with because production facilities and so on will require time and money to be invested, but you can still start your operations with a company and then open a branch in free zone if that would be the case. Okay, you need to get a permission, and what you do basically is along with certain documents, you submit a plan you need to convince the free zone management authority why you want to be in the free zone. What are you going to do? What's your plan? The employment you're going to create, that kind of things are considered while applications are assessed by the authority. And after you get your permission, you have 30 days to rent or purchase a location in the free zone. And that also will require availability, frankly speaking. And as I explained, due to the advantages, as you've seen in the previous screen, there are many advantages. So it's more expensive than setting up a regular company. As I mentioned, tax exemptions are mostly for production companies, and it is these exemptions apply to the goods only produced within the free zone. So what I'm trying to say is you cannot have a company in free zone and, you know, outsource your production to the companies which are not in the free zone. Then you will not benefit from these tax exemptions. And there are certain expenses which you see on the slide is you need to pay 0.5% fees or SIF value that you bring into free zone. And you pay 0.9% over full value that the goods you send from free zone to outside. I will talk about the taxes. You know, the VAT, the standard rate is, even though 18%, the VAT rates change from 1 to 18. There's 8% VAT also. And it's like all around the world, your VATs are deductible. Your VATs can be carried to the next year if you have remaining VAT in your balance sheet. So as you all know, when you pay VAT on your purchases, these are input VAT, and your sales have a VAT, this is output VAT, and of course you can offset these two against each other. And as I said, VAT is applied to all goods and services in Turkey. Export transactions are exempt. However, Turkey, because I'm going to be talking about that, because this is one of the questions also we receive a lot from the clients, just because you are invoicing a foreign company, that does not mean you are exempt from VAT. Turkish regulations are not like that, because the Turkish tax regulations talk about benefiting, and a phrase, I would say, benefiting from. So they say, for instance, especially for lawyers, we are having that a lot. Let's say I wrote a legal opinion for you about a Turkish company, about a Turkish regulation. The tax office in Turkey considers it that this is benefited in Turkey because you are giving something, you know, some information about Turkey, related to Turkey. Maybe you'll take a decision based on this opinion. So they ask us to apply VAT. I just gave ourselves as an example to maybe I thought it will give you a better understanding. Corporate tax rate is 20%, but for the last few years after pandemic, the government increased the tax rates. Last year it was 25%. This year it is 23%. There's no decision taken yet. So next year in 2023, it is expected to be the regular rate, which is 20%, of course, unless the government takes a decision otherwise. The corporate tax is paid every 3 months. This is called temporary corporate tax. So until that period, and whatever tax accrued on your operations, you pay it every 3 months. And at the end of the year, if you offset the total corporate tax amount, you are liable to pay. We have withholding tax paid to the real persons, and you pay the withholding tax on behalf of the counterparty. and which you can, so it's like from it, so you're paying the tax on behalf of your counterparty from the source. I would put it in this way. So there are, you see the rates here, and for dividends also apply to legal entities. Unlike, withholding mostly apply to real persons, but for dividends it's different. For interest earnings, it's different. And for those who pay withholding tax, you register it in your records as an expense, so you can deduct. So it's gonna decrease your profit. Income tax for individuals, we have this, range you see on the screen, and it starts with 15% and goes up to 40% depending on your income. We have some other taxes. As you see here, special consumption tax is applied to certain products. So don't be scared about this 220%. 220% applies to luxury cars, I would say. For cars above certain value is taxed over 220%. It's, there's no, for phones, mobile phones, we pay the special consumption tax. The rates are very different, but as I said, this 220 is an exemption for luxury cars. On the banking transactions, we pay a banking and insurance tax. Again, for instance, when you get a loan, depending on the loan's duration, this rate changes from 0 to 5. For instance, if it's more than a 3 years loan, this rate would be 0. Again, let's say you have a deposit in your bank that you're earning interest. If you keep, let's say, if you deposit the money for over a year, again, this tax is 0%. So it's just depends on the specific transaction. We have a stamp duty that is applied on the documents and agreements that are signed. For agreements, this is the most common stamp duty in practice, is almost 1%. And for lease contracts, as you see, it's less. And there is a maximum limit for this tax, which is around 263,000, as you see, for 2022. This maximum limit cap is every year decided by the government. So if you're entering millions of dollars of contracts, you may be subject to such a tax. Briefly, I would like to talk about employment costs for employers. The Social Security premium for employers is 22.5%. For the employee, it is 15% paid by, again, the employer. And for minimum wages, these amounts lower by 2%. And if you are regularly paying your premiums on time, you get a 5% discount. So your cost changes accordingly. And you also pay income tax of your employee. As you remember, I mentioned about the income taxes in previous slides. The payment of the income tax of the employee is also paid, is also on as a burden on the employer. Okay, customs duties. Frankly speaking, there's no specific rate. You need to get the HAS code of the product, and we have this very long list of documents. Long documents, and you need to identify the product and find out what custom rate applies to your product. And now I'll be talking about these exceptions where you don't pay custom duties and also VAT. If you remember, I was telling, if you are buying and selling only, you don't have a production line, you don't have a production facility, or you don't intend so, you don't need a company in free zone, if you will remember. So transit trading is, as you may all know, is you are buying and selling without having any process on the goods. You can have the product into Turkey and then sell it, or not even have the product not even enter into the country. One thing I want to explain here is, again, because of these sanctions, some companies, for instance, I know I experienced that some EU companies do not want to sell directly to Russia. So what you can do is you can have these goods into Turkey on your Turkish company, under your Turkish company. So the documents will not have anything related to Russia, because you're going to be just buying it, and you can put it in the, we call it entrepot, customs warehouses. These are considered like the warehouse of customs area. You can have it in that, you can bring it in that warehouse and sell it from there to Russia with the needed documents. And when you do that and this transit regime, you don't pay customs fees or VAT at all. And we call it inward processing regime. This is applicable when you're going to have the product into Turkey, have it some process, and then re-export it. Again, if you are processing your products and selling outside Turkey, once again, VAT and custom fees are not paid. Depending on the process itself and the product itself, this may allow you to get Turkish certificate of origin, and which is not applicable under transit trading. There are two systems for that. One is called suspension system. In that system, you submit a collateral in the amount of actually 20% over the amount of customs fees that you have to pay. So once you complete your process and then sell the complete, I would say, complete the export transaction, you apply to the customs authority and you get your security back. Drawback system, the difference is that you actually get the document, the goods into Turkey. You have it, the goods are nationalized in drawback system. You pay the fees and everything, but then after you finish your processing, you sell it, you export it, and you get your money back this time. So the main difference is the collateral amount is 20% more than paying in cash. And you need a permit or certificate to be able to benefit from inward processing regime. And permit is given by the Customs Administration for, I would say, basic processing operations. And I wrote here a few examples: repairs, dyeing, packaging, labeling. So if your process is something simple and basic, you will apply to customs authority and get a permit. If it is more than that, your operation is much bigger, let's say, then you have to apply to the ministry to get a certificate. These are, of course, like, for the regular time limit is 12 months, but of course, if the project itself, I would say, is more than that, you can have this 12 months extended. Citizenship acquisition. This is applicable to any nationals. So if you invest these amounts into certain investment tools, you can deposit money into a bank, you can invest in venture capital funds, real estate investment funds, you can buy a real estate, and the rule here is that you have a 3-year restriction. For instance, if you deposited this $500,000 into a Turkish bank, you can benefit from the interest and everything. You can use that money over 500,000. So your money cannot go lower than 500,000. If you buy a real estate, you cannot sell it for 3 years if you want to obtain a citizenship. For residency, you see the basic types of residencies: short-term family, student, long-term, humanitarian, human trafficking victim residency. One thing I want to say about residency is it's a politically hot issue in Turkey due to high number of residents and refugees in Turkey. So even though on the regulations you may have right to residency, the assessment, because your application again is made to the we call it Göç İdaresi, refugee authority. The thing is, they have full discretion to accept or reject your application. So it is kind of related to political environment, I would say. You can have short-term residency for scientific research. If you have a real property, of course, you can. You can, to establish commercial relations, tourism, medical treatment, study purposes. This short-term residency is granted for 1 year. In the first application, it's granted for 1 year, or limited to, let's say you came here for a language course and your language or course is 6 months, then you're going to get your residency for 6 months. For medical treatment, you're going to get it for the same period with your treatment. We have long-term residency. This is for those who was a resident of Turkey for at least 8 years. Family residency: if you already have a residency permit in Turkey, you can apply for your spouse and children. Student residency: if you go to a high school, university, whatever, this kind of issue matters. And humanitarian reasons are generally, let's say for some reason you cannot go back to your country, or you have an issue that you cannot leave Turkey. If you can prove that, if you can convince the authorities, you can get a humanitarian residency. Human trafficking victim residency, I think, speaks for itself. There's no need to explore that. And thank you for your time. And any questions, I will be happy to answer. Thank you for your time once again.
Hello, Mr. Ali. Can you hear me?
Yes, I can hear you. I cannot see you, but I can hear you.
Well, I have just a couple of questions, actually.
Yes.
My first question about the residency. If you have invest in Turkey, you said like around $400,000 in a property, I can get the citizenship, right?
Yes.
There is just a quick question, as you are already working as a lawyer. and I'm sure you have these kind of issues before. And so my question is, if someone had an issues like let's say about with the Interpol, and he want to get a new citizenship just to avoid this, so he like can do a new uh, let me say like a new name, new ID, everything, so he can just remove the Interpol from him. Would that work in Turkey or not?
Actually, let me very briefly explain how the procedure is. Once you buy the property, that property is sent to the title deed office. I mean, the title deed authority, general authority, not district. Then they check your papers. If there are some documentation stuff. They say, okay, this purchase is good for citizenship. Then you take your residency afterwards. You apply for your residency, and then you get your residency based on this real property purchase, and then you apply for citizenship. Then that citizenship process is subject to security clearance. I don't know if that application, that person can pass the such clearance. Yes, you can do that. So, but of course, depending on the specific situation, prior networking can be made at the authorities. This may be investigated if the issue is a obstacle before obtaining citizenship or not. So I would say about the security, due to the security clearance requirement, it should be assessed by, case by case. So I cannot tell you, no, you cannot get citizenship, but I also cannot tell you, yes, you will get citizenship.
Understood, Mr. Ada. Thank you. And my second question, is there any chance that you can describe us again about the human trafficking victim residency? I didn't get this point, actually. What does it mean?
Actually, it is, the human trafficking is a crime. And let's say they're taking those people, those who deal with human trafficking. What they do is, for instance, they take people from, let's say, Syria, and then promise them to take to some European countries. And during the way, they're being caught in Turkey, let's say. But this kind of people who were used by human trafficking, the people caught in Turkey, they have this specific right to apply for residency. Unless there's a reason for deportation, they can apply for that. But this kind of human trafficking victim residency application is very, again, like it's a political decision of the authority. So there, I would say there is some objective grounds or objective assessment criteria for that.
Understood, Mr. Ali. Thank you so much for your time.
Thank you. Any more questions or? Okay, I think there are no further questions. So, so that means I made such a great presentation, and then everybody understood everything very clearly. So there's no questions. Of course, joking. Thank you so much for your time. It was such a pleasure to be able to make this presentation to such an audience. So unless, once again, one last time, there are any questions, I am going to end the webinar.